everyone. A very warm welcome to our guest of honor, Mr. Anand Mohan Bajaj ji, Chief Guest, Sri Anand Barua ji, Sri V.S. Sunderesan ji, Mr. Lin Chow, our international guest, Mr. Vikram Limaya ji, Mr. Ashish Kumar Chauhan ji, Mr. P.S. Reddy ji, Mr. Vikram Vijay Kumar ji, Sunil Kadam ji, Miss Latika Kundu ji, B.V. Nageshwar Rao ji, Mr. Nehal Vora, Mr. Anup Khandelwal, Mr. K.K. Maheshwari, and all the dignitaries present. Association of National Exchanges Members of India has approximately 900 pan-India members. We at ANMI believe that a robust and an efficient capital market system is only possible by promoting financial and investor education. Our knowledge series, a weekly program workshop, focuses on market-related topics whereby a large number of investors benefit. Third, even though the retail account opening has been very encouraging, our continuous effort and commitment to investor education will increase the percentage of investors investing directly in the equity market. Equity cult in India has a long way to go if we compare ourselves with the developed market figures. This week-long campaign will surely reach millions of investors through press and various online channels, which will in turn promote the objective of investor awareness, investor education, investor protection. This World Investor Week celebration under the aegis of Ministry of Finance, regulator SEBI, support from all exchanges, both depositories, will create the necessary momentum to raise the awareness of investor education and protection, particularly in these challenging times of pandemic. I, on behalf of ANMI, wish extraordinary success to the 4th annual World Investor Week, which kicks off today for the whole week. ANMI is grateful to all who are present and all who have supported this World Investor Week celebration. Thank you and wish all the best to all the participants. I now request President ANMI, Anup Khandelwal ji, to take it forward. Mr. Anup Bhai is currently the president of ANMI and is associated with capital market industry for more than 3 decades. His journey begins with one of the oldest broking firms of Calcutta, Khandelwal and Sons. Later, he took responsibility of a group company, Vardhaman Capital. Anup Bhai, over to you.
Thank you, Kamlesh Bhai, for a nice introduction. Good afternoon to one and all present here. Greeting from ANMI National Council to all honorable dignitaries present here today. Celebrating the inaugural ceremony of ANMI Investor Awareness Week 2020 in the wake of World Investor Week 2020 under the aegis of ISPO and having theme Investor Awareness, a key financial to well-being. The purpose of this week-long celebration is well defined: investor education and awareness. इन्वेस्टर वर्ड को अगर ब्रेक करें तो हमें एक वर्ड मिलेगा इन्वेस्ट, जो ये बताता और सिखाता है कि हमें इन्वेस्ट करना है अपने प्रीशियस टाइम को अपनी नॉलेज बढ़ाने के लिए, क्योंकि इससे हमारी अवेयरनेस बढ़ती है, हम जागरूक और सतर्कता रखते हुए कॉन्फिडेंस के साथ अपने इन्वेस्टमेंट डिसीजन ले सके। यानी इन्वेस्टर इन्वेस्ट कर, सोच कर, समझ कर। This helps each one of us to become Atmanirbhar. ANMI remember the words and duty entrusted to us, among other activity, to impart education and awareness on the occasion of our international convention held at New Delhi. Taking your guidance forward, I am happy to share that in less than 9 months this year, ANMI played a very important role in this drive for financial literacy and financial inclusion by organizing 26 awareness programs through webinars on various important topics. I also feel proud to share that ANMI is working on tie-up with NISM and other graduate and postgraduate colleges, university to nurture the talent and bring the financial literacy among the youth of the country. Sir, in this direction, we are sure today that ANMI will initiate steps to reach out to 1 lakh investors education and awareness in coming years. पिछले कुछ वर्षों का इतिहास हमारे सामने है जहां डीमैट अकाउंट 2015 में 23.3 मिलियन से बढ़कर 2020 में 40.8 मिलियन हो गए हैं। म्यूचुअल फंड फोलियो 2015 में 3.92 करोड़ से बढ़कर 2020 अगस्त तक 9.25 करोड़ हो गए हैं। ये संभव हो पाया है जब मिनिस्ट्री ऑफ फाइनेंस के गाइडेंस में सेबी और सभी एमआईआईज ने एक संकल्प और मजबूत रणनीति के साथ इस दिशा में टाइम इन्वेस्ट किया है। Our institution, NISM, academies run by exchanges, startup including broking houses and associations are doing wonderful job in this direction. I once again express my gratitude and thanks all the eminent personality present on this special day with NME. I will end my opening message with a famous line for showing this solidarity. Sabka saath, sabka vikas. Thank you. Now moving on to introduce our today guest of honor, Sri Anand Mohan Bajaj, Additional Secretary DA, Ministry of Finance. Anand is a very well known face. He is a humble person and has a very dynamic personality. He always hear our concern and work very hard for betterment of capital market and investors. New milestones have been achieved under his supervision. I would like to invite Sir to address this August gathering. Please, sir.
Thank you, Mr. Khandelwal. I see in the list of participants here, very, very well-known faces from SEBI and exchanges. My friend, Mr. Anand Barua, is also, and also heads of all the exchanges are here. So, and then I understand this is the World Investor Awareness Week you are starting. So this is something very, very important occasion, because whenever we talk about capital markets or securities market, there cannot be a market if there are no investors. And also, a market cannot function well if we do not have trust and confidence of the investors. And the trust and confidence of investors will come when we have policies, procedures, structures, and mechanism in place that yes, everything is working as per the system and everything will happen always as per the system envisaged. So it's not only working, it will always continue to have. You all are aware that we have, as a nation, resolve, and we are aspiring to make India a 5 trillion economy. And that was to be done by 24, 25. That is still is our goal, even after Corona. And even after some slowdown, which we have witnessed recently. But we are very confident that the reforms which the government have introduced and the strong market system which we have will help us achieve our goal. But for that, the importance of well-developed capital markets cannot be under-emphasized. Now, this is not only for financing the economic growth, but also for the development of our infrastructure and also for fostering and maintaining financial stability. For all that, we require a well-developed, well-functioning capital markets. And for that, it is again very important to have the relevant robust policies in place, which should include well-established exchanges that we have, clearing and settlement system to ensure that we have not only ease of access, but ease of transactions, very robust regulator and surveillance framework, banking and money market arrangements, a strong legal framework that ensures the enforcement of contracts in the corporates whose securities would be traded, a very strong governance framework, corporate governance framework, the regulatory system and the government system to ensure efficient and effective investor protection mechanism, and for that, accurate information about the financial soundness and future prospects of the companies must be available on a timely basis. And therefore, for the investors, what we call financial literacy and financial awareness and access to all information are all very, very important. And for these, it is important for institutions like ANMI to organize investor awareness events. SEBI is doing wonderful role in investor awareness and protection. I'm sure my colleagues from SEBI would talk about it in greater length. So I will not go into detail of that. But you have all seen that recently the number of retail investors in the share market has increased. Now that is a welcome event, welcome thing, but at the same time, it is also very important, particularly for market institutions and intermediaries like you all, to make sure that we continue to enjoy their trust and confidence. There are a lot to be said on this. India requires a very effective financial markets to tap the savings from every corner of the country, from a small investor to big investor, to be financed for the progressive sector of economy through the capital markets. And for this, the investors' protection, investors' education, investors' awareness, investors' participation in markets, all are necessary. And I congratulate ANMI for organizing this event. And I thank all the organizers and also the participants who are present here to contribute to this cause. I could have spoken much more, but I have a limitation of time because I have another meeting to attend sharply at 4, which has already happened. So I would also like to seek your forgiveness. I would have continued to also hear other participants, but as I had already informed ANMI that I have to just rush for another meeting, so I have to conclude. I'm grateful to you all. Thank you very much.
Thanks a lot, Mr. Bajaj, for highlighting very important points on today's topic. Thank you once again. So Continuing the session, we have with us our chief guest, Sri Anandji Barua, whole-time director. Anandji is presently overseeing various departments in SEBI and decision maker for many of the reforms recently enforced for the benefit of the investor at large. Sri Barua ji was on the deputation to the Central Bank of Bahrain as a legal advisor and has also worked with IFCI, NFL, DCM Limited. Sir, please give your valuable guidance to us and investors.
Good evening, everyone.
वीडियो नहीं आ रहा है वो
वीडियो नहीं आ रहा?
वीडियो स्टार्ट कर
उनको बोलना कि किसका फोन है वो? अच्छा, उनको बोलो कि मैं उधर उसमें हूँ, कॉन्फ्रेंस में हूँ।
वीडियो स्टार्ट कर दीजिए।
हाँ, कर दिया है। हेलो, are you able to hear me? Yes.
Yes, sir.
Good evening, everyone. As we see, the previous speaker, he has spoken about the trust and confidence of the investors, which is one of the important thing. And SEBI as a regulator, we have no multiple prongs, policies, and regulations for investors' empowerment and protection. As you know, the financial product, it has a peculiar features which is different from the other product. Like suppose you invest in gold and other thing. This product is invisible. Second thing, it has a distant moment of truth. And third thing, what has happened now, there are a whole range of products where to invest. Shares, debentures, REIT, InvIT, then commodities. A lot of product has come. Even in case of mutual fund, there are more than 40 mutual funds. So they have about 800 schemes and all. And therefore, the investor, especially you see in India, which is one of the largest listed companies in the world. And we have seen during this pandemic, a large number of investors have joined. And therefore, it is necessary that we have retain their trust, and the system of investment is made easier for them. Actually, as I said, we have the multi-pronged measures for the investor protection. First thing which we encourage is that there should be ease of investing from the investors. And for that purposes, and there are many avenues. And India is one of the countries where the investor is able to directly participate in the IPO. That is one. Secondly, in the mutual fund, we have a direct investment, and there is also cash investment. And he can invest in many area of products like ETF and others. And recently, we have also allowed the investors to use infrastructure of stock exchanges for investing in the mutual fund schemes. And that is one aspect. The second aspect is the level of transparency. India is one of the countries where the level of transparency is very high. Especially when you invest in the secondary market, you can see that the best, when you place the orders and all. And after the orders are executed, you are sent an SMS from the exchange or from the depository, and you can also see from the website. And therefore, you know exactly at what price your trade has been executed. That is one of the important level of transparency. Earlier, when there was an outcry system, there was a system prevailing on Gala, and which has now gone. Similarly, an investor is given consolidated account statement. He gets all the statement and he knows, especially in the case of mutual fund, he can know that how much commission he has paid. And in the contract note, he also knows the price, that commission he has paid. And one of the beauty of investing in the securities market is, especially in the mutual fund, you have a daily NAV, and you also know the whole portfolio where your money has gone. Similarly, the second aspect is, the third aspect is, one, I have said that it is the ease of investment. Second is the transparency. And third is the regulation. And here, the regulations, we have especially the regulation addresses the three main aspects. One is conduct regulations of the intermediaries. And second is market regulations when the security is traded in the exchange. And third is we address the conflict of interest. As you know, one of the challenging things has been to prevent misuse of clients' money and assets. As we know, the intermediary is a trustee, and when he gets the money from any investors, he is not supposed to use money of one for benefit of others or for own use. Similarly, securities also, he is not supposed to use security of one for other purposes. And that is one of the hallmark of Indian securities market. And we have seen in case of other countries, there may be omnibus account and all, but we have a segregated account. And therefore, this rule has to be followed very scrupulously. That is one of the important things which we are addressing. And recently, we have come out with a lot of measures to prevent misuse of the securities of the client or the monies. Similarly, we have a market regulations. The purpose of market regulation is to prevent. We have to see that when a security is traded, it is free of manipulations. And therefore, now we have a regulations like insider trading regulations, then preventions of market manipulations and all. And India is one of the countries where we have a online surveillance. And this surveillance system is both connected with the depositories and the exchanges. And therefore, there is a real-time monitoring. And secondly, we have come out with UCC, that is Unique Client Code. What happens when there is a movement of the securities? We know whose securities and where it is going. And in a similar panel discussion, somebody asked me whether you can prevent fraud. Then in the securities market, our endeavor is to prevent that one. But one thing we have to tell now, the example which I've given is that you see the example of CCTV. There may be theft, but now there is a chances that he may be caught. There is a full audit trail of all the transactions. Therefore, if there is any manipulations, and fairly we can have an audit trail, and therefore we see whether this trading was for the purpose of manipulation or for the commercial transactions. And the fourth aspect is of risk management. when if you see this mutual fund or any intermediaries, when they handle the securities, when they trade from any places in the world, it is necessary for the intermediaries or the mutual fund to see the money which has come is invested properly and as per the whatever in case of mutual fund scheme or no, as per the offer document and all. And therefore, there is a lot of prudential requirement has been made where they can invest, and sectoral investment restrictions are there. Recently, there is inter-scheme transfer and other thing has been bought. And mutual fund also has to see, there is there's no asset liability mismatches. Especially in case of debt fund, they have to actually maintain at least 10% of the liquid assets. That is the minimum, but a mutual fund who knows the nature of portfolio, depending on that, they have to do stress testing and maintain the adequate level of liquidity so that they can meet the redemption request which may come by. The another thing is, the last one is the governance. And especially there is a lot of trust on corporate governance, and the investors is one of the stakeholder. As you know, one of the committee which is required under the corporate governance is the stakeholder committees. And all the companies or intermediaries, they need to have a system in place for redressal of grievances of investors. And SEBI has also been encouraging this stewardship code. And recently we have seen increasingly the mutual fund and other investors, they are taking they're participating in the roles in the corporate governance. And whenever it is not in the interest of the investors, they are taking a step so that the board or the management, they act in the best interest of the shareholder and the company. These are my initial observations, and I thank NMI for taking this initiative for this World Investors Week. And I see there is a lot of initiatives which have been lined up, like nationwide quiz competitions, then launch of digital brochures, a booklet on securities market, and a lot of informative videos. I think this will help, and it will help in bringing more investors and channelizing the money of our savers for the economic development of the country. I wanted to thank all of you for giving me this opportunity. Thank you.
Sir, unmute yourself.
Thank you, Anand, sir, for giving the valuable guidance to all of us on various product available, regulations, transparency, and governance we have in India. Thank you once again. To give the keynote address, we have with us Mr. Sunderesan, Executive Director, SEBI. He has 30 years of experience, supervised more than 500 investigation cases, delivered 350 plus lectures in India, within India and overseas. Sunderesan ji is presently heading the Integrated Surveillance Department and Commodities Derivative Market Regulation Department of SEBI. Sir, we shall be delighted to hear you.
Good evening to all the dignitaries and participants. Thank ANMI for inviting me to the inaugural event of World Investor Week 2020. To understand that it is the first time ANMI has joined in the celebrations of World Investor Week, which is a welcome move and makes it a proud occasion. The earlier speakers have covered some of the recent initiatives taken by the government and SEBI for investor awareness and education, as well as protection of their interests. Therefore, I don't think it will be appropriate to repeat the same. I would rather like to deal with the subject of intermediaries and investors by traveling through a different path during my address, drawing some analogy from mythology. As we all know, Lord Shiva has 3 eyes. It is said that the middle eye, which is on his forehead, is very powerful. It is also called the symbol of knowledge and supremacy. Similarly, securities market too has 3 eyes. Of course, it is not EYES, but the capital I's. That is, issuers, intermediaries, and investors. This middle eye, which represents intermediaries, plays a vital role in bringing the gap between the issuers who need the money and the investors who provide the same. There is a story about how Lord Shiva opened his third eye for the first time. I'm sure most of you would have heard it. The story goes that Kama, that is the lust, hid behind a tree and shot an arrow at Shiva's heart. Lord Shiva got little disturbed. He opened his third eye, which is a fiery eye, and burnt Kama, that is the lust, to ashes. 2. The middle eye in the securities market, that is the intermediaries, being the most powerful in my view amongst the 3 eyes, should use their might to remove greed, impatience, and misconceptions from the minds of investors through education and awareness. In this regard, I would like to compliment ANMI for playing this role in a very commendable manner. A perusal of ANMI's website would vouch for this observation. Securities market in India has evolved over a period of time with newer but complex products, newer participants, etc. It is thus necessary that retail investors who enter the market invest with knowledge and understanding the risk associated with the products they choose to invest. Do not get carried away by false promises of unrealistic or assured returns made by certain elements. Recently, we have seen record number of retail investors opening demat accounts. The demographic study shows that most of them are young investors. While it is a good sign that newer investors are entering the market, it is all the more necessary for them to understand the functioning of the market, the risk involved in various products, and the precautions to be taken before making an investment. Here comes the role of organizations like ANMI, who have to play a two-pronged role. 1, to involve actively in the area of investor education and awareness activities, which ANMI is doing as seen from their website. To sensitize their members to explain the risk associated with various products to the retail investors and avoid mis-selling. Here, in my view, their focus needs to be sharper than never before. ANMI members, being intermediaries, intermediating between investors and the market, need to ensure that they act in a more responsible manner towards protection of legitimate interest of investors. Principal agent relationship, that is, investor and broker in securities market, the most important aspect is trust. As Mr. Anand Bajaj pointed out, trust and confidence are the hallmarks of any financial system. Brokers should conduct in a way that they are trustworthy and reliable at all times. However, some of the recent episodes have caused severe damage to the credibility of one segment of intermediaries. Such events actually destroy the integrity in the market. Therefore, there cannot be a more appropriate time to have a program of this kind to regain the lost trust. The entire week is dedicated to the most significant stakeholder, an important pillar of the securities market, that is the investors. How investors perceive the market depends to a large extent on the level of trust existing between the intermediary and the investor. This relationship should be a mutually respecting symbiotic one. Each one should appreciate and try to address the concerns of the other. This World Investor Week celebration will go a long way in not only developing an investment culture in India, but also create more informed investors. Equally, the week-long program scheduled by ANMI will enhance the trust between the brokers and the investors. Thank you once again for giving me the opportunity to participate in these celebrations.
Thanks a lot, Sunderesan ji, for the valuable inputs on the subject. And what a nice explanation you have given by example of Lord Shiva and 3 III. Thank you, sir. Now we are delighted to have Mr. Sunil Kadamji, Registrar of the National Institute of Security Market (NSM) and Educational Initiative of SEBI. Mr. Kadam has worked in the SEBI. Mr. Kadam has worked in the SEBI in the various departments and handled the work related to administration and inspection of MIs and intermediaries, surveillance and investigations, corporate finance. Mr. Kadam was also a member of SEBI Committee Coda and Auditing and Assurance Standard Bureau of ICAI. Under his leadership, NIS is touching new heights with every passing day. So, your guidance on the subject will be very important for all of us.
Yeah, thank you, sir. First of all, thank you ANMI for inviting NISM and me for this forum and share our views here. Respected Sunderesan sir, all other dignitaries and my friends. This is a forum, this event, in fact, this fortnight which we are celebrating for investor awareness. So if you look at the SEBI's mandate, it gives 3 mandates: regulation, protection, and education. Basically, what we are doing is that key investor protection is an area which can be managed by 2 ways. By first, we will create more and more awareness about the securities market, make them more informed about the securities market. And second way is by protecting the environment in which they deal. That means our intermediaries through which they deal, that environment should be more improved. So these are the 2 areas which we focus in creating the awareness as well as protection of the investors. So as far as protection is, awareness is concerned, all the stakeholders which are part of this event are actively working in various areas, and we are all doing good job, and we will continue to do good job. As a part of participation from NISM, we, under the guidance of SEBI, conduct various activities like certification, education of entry-level students, then training for various market participations, and also conduct various courses, programs with the market intermediaries for awareness programs, as well as also conduct programs in the education. So a lot of educational activities also we are going to plan, where e-learning activities will be developed and students will learn sitting their home, lot of activities of securities market. Whole idea is that large number of people who are aware about securities market, and when they participate in the securities market, they are informed investors. So more and more informed investors are there, the market is automatically get protected by their informed participation. So that is one way of creating this thing. But I would also like to, since this is a forum which ANMI is programming, and there are various intermediaries are part of this program. So when we are talking about large number of people or large number of investors coming into securities market, we need to build their confidence. So awareness, education is one part of it. But second thing is that we need to their confidence by avoiding the mishappenings. Like Sunderesan sir has indicated some of the instances where the investors feel that their confidence has been going away. Why? Some people we find that there is a suitability issue is there. Like when we are aware that investor is not aware about the securities market, he is old, he is not knowing anything. The product like derivatives are being sold to him, and when they lose money in that market, they find that it is not a trustworthy market. Then there are misuse of securities, client securities, funds are there. These are instances happen. These are in isolation. I am not saying that this is a rampant practices on all these things, but these isolated instances by some of the our members lead to a loss of confidence to the investors. And together, all of us, we need to take measure to see that all of us, we are dealing in the security market on behalf of clients, are taking adequate step measures so that clients feel secure. If our success is more, if client feels more secure about us and he comes and deals with us, that is a mantra for all of us to bring investors. Already there are large number of investors are there. We don't want to lose them. What we want is we want to increase more and more people. It is not a inviting them is not for benefits of the brokers. It is for the benefit of the industry, corporate, overall economy. So it is a larger issue which we are all dealing with it, and all of we are the stakeholders for that thing, and we are doing wonderful job so far, and we will continue to do it. So this is all from my side, and I wish all the best for ANMI for doing all this program. In case anything they need from the NISM, we are always there for their support. So thank you very much, sir.
Thank you, Sunilji, for highlighting the two ways to us, awareness and protecting the environment, investors. Moreover, you are spreading the e-learning platform, and you are also taking the various proactive steps for creating the awareness. So thanks again. Thank you once again, sir, for being part of this event. Thank you.
Okay, thank you.
So we are honored to have our international speaker, Mr. Lyndon Chow, Managing Director of ASI FMA. He is handling equity and post-derivative division. Thank you, Mr. Chow, to accept our request to attend the webinar in a very short period. Mr. Lyndon is a seasoned leader in financial services who, before joining ASI FMA, built a 26-year career with Morgan Stanley across several markets in the capacity of Managing Director, spanning New York, Hong Kong, Beijing, Taipei, and Shanghai, mostly serving as CEO. Mr. Chow, we will be delighted to hear from you the international perspective on investor education and awareness and message to our Indian investors. Mr. Chow, please.
Great. Thank you very much. Can you hear me okay? Great. I would just like to extend my thanks to ANMI and to my friend, Mr. Kamlesh Shah, for inviting me to speak today. It is truly a privilege for me to join you during the ANMI Investor Conference. ASIFMA, we typically call it a SIFMA. A SIFMA is the largest trade association supporting financial markets in Asia Pacific. We are one of 3 sister organizations around the world. We focus on Asia Pacific, SIFMA focuses on the US, and AFME focuses in Europe. Collectively, our members, representing all the global banks and global investors, we account for about $35 trillion of assets under management. What do we do? So today I'm gonna cover what does a SIFMA do, how do we do it, and what are the opportunities we see across the region, and what are the opportunities we see in India. So what do? We build and we strengthen capital markets. What does that mean? So we focus on the infrastructure. We focus on the plumbing. We focus on the access channels to allow money to freely flow in and out of every market through the exchanges. We explore what the market access issues are, or the level playing field issues are for global investors. We try to frame industry consensus to understand what is truly to the benefit of the market, and then we try to advocate for international alignment to global practice. So how do we do this? We organize committee meetings with members to build consensus. Very often there's quite a lot of active debate, and we engage both members on the buy side, the sell side, the front office, the back office, to try to figure out what are the real issues and what are some good suggestions, recommendations to make. We respond to industry consultations. We host conferences, webinars such as this one. We publish white papers, and we very actively engage with regulators and exchanges across the entire Asia-Pacific region. And as we go across the region, what are the opportunities that we see? For one, we see that the global competition for trade, which is spilled over to the global competition for technology, has spilled over to global competition for capital. So, as regions shift around in terms of, the balkanization of supply chains to new markets, increasingly governments are realizing just how important capital markets is to support the real economy. And we've seen a real regulator pivot, historically just focused on supervision and oversight, increasingly pivoting more towards market development, trying to figure out what do we do with our market to attract more capital. And what we've seen in some markets, they seem to be succeeding more than others in terms of international alignment. So I'll take as an example, China. So China, for example, offers multiple channels of access. So not only do they allow foreign investors to directly come in through the QFI channel, the equivalent of India's FPI, they also have various stock connect schemes between the Hong Kong Stock Exchange and the Shenzhen Stock Exchange, or Hong Kong X to Shenzhen, or Shanghai to London. They even support OTC derivatives, structured products access to China for market access. And what we've seen too, they've been very focused on IPO reform, making it easier and easier for companies to list on the Hong Kong Stock Exchange, the Shanghai Stock Exchange, the Shenzhen Stock Exchange, market reforms with respect to weighted voting rights, trying to attract more and more corporate issuers to the local exchanges. And as a consequence, we've seen foreign investment in China A shares triple over the past few years. So it's still a small number. It accounts for only about 5% of the overall position, but we've seen it triple at a very, very fast pace. If we look across the rest of the region in Southeast Asia, we also see quite a lot of active movement. So there's a steady migration towards T+2, the settlement cycle of T+2, which is in global harmony with other settlement cycles around the world. So over the past few years, we've seen Indonesia, Singapore, Malaysia all shift over to T+2, and we're seeing the Philippines now also shifting over to T+2. And Vietnam is also very, very anxious to welcome more global capital. They're trying to reform their markets as well and to be upgraded from a frontier market to emerging market. So we're working with all of these markets, all of these exchanges around the region to try to improve their capital markets. But there are other markets who are more driven by, I would say, domestic or populist agendas. So we're seeing Australia, taking a harsher and harsher tone towards global investors, towards global banks. And in Korea, what we've seen is a short sale ban that was launched in the midst of COVID-19, which is understandable amidst the market volatility. But they announced a 6-month ban, and they just extended it by another 6 months. So they're making their market very difficult for global investors to play. And we've seen foreign investment trading activity drop by half in Korea from last year to this year as a consequence. So what did we see in India? So I was very much encouraged by Minister Bajaj's earlier comments, trying to take the country towards a $5 trillion economy, trying to improve the ease of access and ease of transactions. Those are definitely the right areas of focus in order to try to bring in more capital into India. But there are some issues. The most recent issue is a focus to move towards a T+1 settlement cycle. So India currently is on T+2. India currently is completely aligned with global international settlement cycles. It's like everyone is using an iPhone and everyone gets to download apps from the App Store, and everything works very, very smoothly. But if India were to move to T+1, then you would be introducing a different architecture a different way of doing things. And that's going to make it very difficult for global investors to participate. So, we strongly urge caution and prudence on the part of the regulator, really not to move in this direction. Other markets are moving towards T+2. You have it. It's a great advantage. Please stick with it. Don't change the T+1. Another issue impacting investors is block trading. Block trading is a mechanism which is very, very important to the BlackRocks, the Vanguards, the State Streets, these big, ETF passive fund managers who built up sizable positions in India over the years. And sometimes they need to transact a large trade and do it quickly in order to minimize volatility to the market. But in India right now, you only have two 15-minute windows for block trading. And the price band is limited to only plus or minus 1%, which if you look back at history, that only counts for about 10% of the flow. You really need a price band of plus or minus 7% in order to accommodate 90% of historical activity. So this is something which we've been advocating to SEBI to consider increasing the price band and expanding the block trading window. Because without that, what's happening today is foreign investors have no choice but to execute their big blocks on the open market. They try to slice it up, but even if they slice it up, they're still pretty chunky trades. So, and what happens is that there's information leakage about these transactions. There's quite a bit of front running, and so there's price slippage. So from a foreign investor perspective, their interests are being harmed. As an investor, their interests are being harmed. But retail investors, ironically, are not benefiting. So, please go talk to the exchanges and look at the data at these big blocks. Retail investors are not benefiting. They're out there in the marketplace, and then all of a sudden, a big trade splashes into the market, and they get overtaken by tsunami. So from an investor awareness, from an investor protection perspective, I really, really encourage India to take a closer look at the block trading mechanism, because right now, today, it does not serve global investors' interests, nor does it serve domestic retail investor interests. So I would just say in closing, amidst COVID-19, everyone is stretched for money, right? Governments are operating with deficits. Everyone needs global capital. But money has no national loyalty. It just goes wherever the opportunities are. And I think Asia, India, as part of Asia, we have very, very strong fundamentals. It's a fast-growing part of the region. Higher GDP levels than the rest of the world, a strong and growing middle class, a very young demographic population. This is where the growth is. And so when you couple the strong fundamental story, relatively higher yields, along with easy market access, that's a winning combination. So if the financial infrastructure is smooth and efficient, as Mr. Bajaj said, that's the goal, right? If the financial infrastructure is smooth and efficient, then the capital will come. And so those markets which choose to focus on that to make the plumbing very efficient, plus the very positive fundamental story here in Asia, the money will come. But if not, then the money will go away. So there are very clear consequences to policy decisions. But that's what we're here for. So ASIFMA, you can kind of look at us as a partner. Maybe you can call us the arms dealer for financial markets. So, we're very happy to partner with India, with markets within the region, to make the market stronger and more attractive to global investment from around the world. Maybe I'll close there. Again, thank you so much to our friends at ANMI for inviting me today. Thank you.
Thank you, Mr. Chow, for updating on the various work undertaken by SIFMA and speaking on the opportunity in the global space. What I understand that you are keeping a very sharp eye on the various development in the Indian capital market. So thank you once again. So continuing the session, now I am handing over the responsibility of taking the session forward to Mr. Kamlesh Saraf, our National Council member, who is very much instrumental in designing the ANMI WIW 2020 program. Mr. Kamlesh Saraf. And thank you to all of you.
Thank you, Anup Bhai. It's everyone can hear me, right?
Yeah.
Okay. Thank you. Thank you, Anup Bhai. Thanks, Lin Chow. Excellent advices and a touch of the global perspective that you gave in. T1 that concerns you is also one of the things that you have mentioned. And of course, market infrastructure is something that we would all want to be part of in terms of building it up. So thanks so much for getting in this conference today. Let us now bring in another perspective. Mr. Nehal Vora, who is the Managing Director and CEO at the CDSL. He took over as the head of CDSL after 23 years of regulatory experience at SEBI, BSE, and DSP Merrill Lynch. So we would like to take the depository part of the experience also and how we take over. Over to you, Nehalji.
So first of all, I would really like to thank Kamlesh for the kind introduction. I would like to wish all of you a safe and secure time in these very, very difficult times which we all are passing through. I'd like to thank ANMI for this very opportune conference which has been conducted during the Investor Awareness Week, a key to financial well-being. So I think from a CDSL standpoint, I would like to bring in some different perspectives as a market infrastructure institution. So SEBI has constituted something called the Market Infrastructure Institution Group, which comprises of the exchanges, clearing corporations, and the depositories. We are a closely knit group where we do compete, but we cooperate to a large extent on the regulatory side. As a popular adage goes, you give a hungry man fish to eat, he will probably not remain hungry for a day. But if you teach the person how to fish, he will never remain hungry. So taking that cue is really the ethos in which the MI ethos is built around. Is that today with a large number of investors joining the Indian securities markets, and CDSL has seen around 2.7 crore demat accounts, which is around 27 million demat accounts as part of its fold. And it is growing. But more importantly, it's the new age investors, the millennial investors. And there's a paradigm shift which is happening in the way they see regulation, the way they see information flow coming to them. And what they prefer is DIY, do it yourself. They need more and more tools where they do not want to rely on anybody else but themselves. They need transparency to be the core foundation on which the entire infrastructure is built. And this is where CDSL has been at the forefront. We take the ethos which our Honorable Prime Minister has put down of being Atmanirbhar or self-sufficient, where we want to give tools to the investor. So we have extended it as a group to call the Atmanirbhar Niveshak, or the self-sufficient investor. And that's the core theme on which CDSL is working, where we are giving a lot of tools like easiest, to name a few, where the client can check its own demat account by himself, transact on its own through the comforts of its home. And this investment in this kind of infrastructure has seen the benefits or the dividends when we had the national lockdown and the securities market went on unprecedented without a single day of stoppage. And that is testimony of this entire investment which we've made. The second theme which I would like to make from an MI perspective, and especially from a depository standpoint, is that while our business model is a B2B, but the information flow is B2C. And that is another important paradigm on which we have built our infrastructure, where a lot of the information, as the previous speakers from SEBI have also highlighted, that a lot of information flows directly from the market infrastructure institutions like the depositories directly to the customer without he or she relying on the intermediary to gain that information. And this is to build the trust factor, to have a neutral participant, to ensure there's no conflict of interest. And therefore, a program like this is extremely critical because it really urges the investor, use these tools by yourselves. The MIIs are here to give you those tools where you can check these things on your own rather than relying on somebody else, which is going to bring in more integrity, more accountability into the market. In fact, SEBI has introduced a very interesting system called the margin pledge system, where the depositories were at the core. And that has changed the entire paradigm of doing things, where the shares don't move out of the investor account, but yet has the ability of leveraging it through various folds or various layers between a trading member, clearing corporation. So this shows that whilst the transparency remains, the business does not suffer. And that is the twin objective with which we are working. So my advice to all the investors would be update your key know your client details like your mobile numbers and email IDs, which are correct, because then information would flow directly to you. Second is download these applications, which are all mobile friendly, be it an iOS or an Android phone. Get these applications in. And third is, like we verify every single day of what we eat, we should be verifying our investments, which is the hard-earned money, on every single day. And these are these tools which are really available. We even send monthly statements directly to the investors, directly from the depository. So my to really end, to bring in the self-sufficiency is the investment each investor needs to make within itself to ensure that it has the relevant tools, the relevant intent to make it truly self-sufficient. Thank you so much.
Thanks, Nehal bhai. That is something that you all have actually done. Both the depositories have actually given a platform where the easiest, speedy, as we will go to the NSDL also, and it's been so much of convenience for most of the investors to kind of go online and do what exactly they want to do. Very important point that you brought out was that every investor, like, we check on every small thing, but we forget to look at our everyday the statement. What is the valuation that's going up, down? Now we need to check, because suddenly you realize that the shares have moved out of your account, which will not now happen with the new MPR system that's put in place. So I think it's a great thing for the investors to, as you pointed out, to check into their regular statements and to do things online versus being dependent and move the shares onto the broker's account. Thank you so much, Nehal bhai. With that, we would like to go to GV Nageshwar Rao. Mr. GV Nageshwar Rao is the Managing Director and CEO of NSDL. He has an extensive experience in the insurance and the financial services industry. So, Nageshwar Rao, over to you, sir.
Kamlesh, thank you very much. And to begin with, so I would like to congratulate ANMI for this kicking off this World Investor Week with such a lovely program, and planning activities for the whole week. So and as you know, that investor awareness is one of the very important facets for increasing participation in the capital markets, especially the retail participation. Because so if you wanted to simply invest in a fixed rate bank deposit, it doesn't really require much knowledge or awareness. But for you to participate in the markets, invest in the markets, and actually make a good return out of it, you do need knowledge. So investor awareness, of course, has played its role in terms of expanding the participation in our markets. But I would say that the most powerful driver, which has actually brought in extensive participation of retail investors into the markets, as we have seen world over, is coming to India as well. And I would say that this most powerful driver really is low interest rates. So we have seen the low interest rates in all the Western markets, so, and how so that has actually propelled great retail participation in the markets. Because see, in India, as you know, so was always a market of high interest rates. So when you had interest rates of 8-10%, so people could invest in fixed income, so and get enough income to take care of their expenses, for example, or at least to see some appreciation in their investment. But if the interest rates are going to go down, because we have seen this, in Western markets especially, so we have seen zero rates, so negative rates and so on, and even otherwise, on long-term basis, those rates were low. And this is something that we are beginning to see in India. So we have never seen the low interest rates continue for, a long period in our market. And I think, so this has come to stay. And I think the upside of this low interest rate regime, I would say, is, so people need to make a choice on where they want to invest, so that, and then, be prepared to take some risk and, of course, invest in the capital markets. If the interest rate today, like are, maybe 3 or 4%, what do you do? Where do you invest? Where do I invest? Is an imponderable question today, which is on everybody's mind. And I think that's the core question that any investor awareness program or investor education program needs to address. Because it's no longer the olden days, where everybody can simply make simple choices, and manage their money. The time has come for everyone to take risk, understand risk, and how to make an assessment of how much risk they themselves would like to take. And what is the way to invest by taking maybe an acceptable level of risk from their perspective. Maybe to start off by investing in mutual funds, maybe by start off taking, buying index funds or ETFs and so on. So I think this is really the opportune time, for us to really drive greater participation through an education program like this. So, and I think, so that's a great opportunity for all for our markets, I would say. And so how do you ensure that the people are kept away from pitfalls like frauds or manipulation? So all of the other things, so that also in the markets. So and I really want to compliment ANMI for taking this initiative, and also like I say, so that in my view, it's a great time for development of our markets, and all the best. Thank you very much.
Thank you, Nageshwar Rao, for appreciating ANMI's efforts. Thanks so much. 2 points that brings out is that the interest rates have been low since a while, as you mentioned, and for the longer they remain lower, the better are the markets. And I think we've got a bit taste of it. We've seen that the Sensex and the Nifty both are at the highest point as we talk today. And I'm sure it's I'm sure it's going to be. Risk is something that every so such webinars or seminars will make investors aware that what is the risk appetite and what should be the financial planning and how much risk that one should take on the plate to play the market. Thank you so much. Your presence has made the difference. Thank you. The next person is that from the commodity perspective, we thought we should take a little view of how things are moving. Miss Latika Kundu is the CEO and the director for Metropolitan Stock Exchange of India. She's the first woman to be in this role at the MSE. She has over 20 years of experience of leadership roles in setting up of managing global exchanges, depositories, and clearing houses. Latika ji, I welcome you to give your thoughts.
Thanks, Kamlesh. That was a very kind introduction, generous one. I thank ANMI for hosting this inaugural session on the World Investor Week. We had a very nice inaugural opening bell session at BSE this morning. And it's very good that the focus is clearly on investors. I definitely appreciate all the thoughts that have come in so far. And what catches me most is what Mr. Sunderesan mentioned about the 3 I's, the issuer, the intermediaries, and the investors. When I think back, I say, what is it that, what is it that really the markets are doing? They need to generally take a balance across 2 things. One is the market regulation, and second would be market development. While we have reached a long way from the open outcry days, and definitely our markets have developed. It was nice to hear from Mr. Chow how the global markets recently moved to T+2, whereas we in India have moved to T+2 way back and are now looking at moving to T+1. Now, whether or not we move to that is a second debate, but getting to the main point is really how far have we reached into our own market. We have a population of 1.4 billion people. More than 80% of them are literate. And probably a similar quantum has a mobile phone access and can also have an easy access to the markets. But when we look at numbers in terms of the participation of these, people into our capital markets, it's a far cry, because you're seeing more than half of US's population is participating in their capital markets through some means, whether directly, indirectly, in any ways. Whereas here, when we look at it, we still are at under 3%. And that too, that is the Demat accounts that are open. While, as I said, that yes, it is an achievement we have made from when we were in physical stocks, we were in open outcry and moving on to, into Demat zone and all. But I think we still have a long way to go. So the one I think that needs to get added is being inclusive. Having an inclusivity of making sure that our market regulations and our market development are looking at all policies and creating market structure which is inclusive, which is taking in more people, which is allowing larger participation. And that is why the education also has to be focused in that direction. I'm obviously, being a woman, I'm very happy that, the theme also involves around women centric, and that also is a portion of being inclusive. So similarly, we need to definitely, make inclusive, becoming inclusive and not being exclusive. I think it's quite some time that we have seen that the markets are concentrated in terms of, participation. Most of the volumes come from concentrated sources, either at, large institutions or large broking firms, which is good to have. But at the same time, we need to do much more. So we definitely need to look at how, while we need to be safe and while we need to protect, but we don't need to overprotect. We need to let, education take care of that protection role. And I think Nehal mentioned about do it yourself, which was a very good point. Where now the new millennials, whom we do see, they are the ones who are the ones increasing into participation. They are the ones who are saying, let's come in and see what this market is all about. So those tools going to them. Similarly, education going in a similar manner, being more of ease of access in terms of them understanding matters. I think India has definitely got its regulations right in terms of, seeing global markets, having worked there, having experienced what are the different regulations or market structures that go there. Definitely, we do take care a lot about our investors. Just as in any markets, there's always a risk. There's always going to be a fallout. Then it's about how much is the fallout vis-a-vis what is it that we are growing. So somewhere, while we need to take care of each and every investor and we want to take it to the last mile, we know that it may not be all that pragmatic, but it may be more pragmatic when we include more people in. When we say that the last mile of people, can we go wider, deeper? Can we go to beyond tier 3, cities? Can we go right up to that last mile? When the literacy rate is so high, when we as a country are such a huge country with so much population, why we cannot have more of them participating into the capital market space and look at education, making it simpler for people to understand not only what the market holds or what the market offers, but even the products and even what the risk holds. So yes, of course, that is the whole purpose of this week. And also of, SEBI has been doing a fabulous job in terms of ensuring NISM has been spreading out a lot of good materials as well as education programs, encouraging participation, certifications, which is very good in all. I just hope that we can now onwards, whenever we make any policies and we make any market structures, we definitely look at it from the inclusivity angle of how many more people and how many more can come in and participate in this market. ensuring on both ends, on the market regulation side as well as on the market development side. I think when we keep that as a base principle, we will definitely be taking care of the market as a whole, the investors, and be able to grow this not only in a healthy way but also into a much larger market. And we probably then will be looked at not just for being early on T+2, but also for having an absolute number of such a large population that participates, thereby making it more, because you can bring in more instruments, you can diversify. 3 to 5 exchanges may not be enough. You can bring in more exchanges in and more products, so that way you actually include. So that's what I would like to actually convey. Thank you for inviting me, and I look forward to more sessions.
Thank you so much, Ratika ji. I think including investors and including even more exchanges, I think that's a great thought. And of course, another point that you brought out is that we are less than 3% of total people that do actually invest into direct equity market versus the developed countries, which may have 40 plus or maybe 45, 48% if US is the case in point. So yes, we've got a long road to go as far as making your inclusive market infrastructure, as you rightly said, and going to the last mile, getting the retail clients in. Thank you so much for sharing your views. With that, we would want to invite Mr. Vijay Kumar. Mr. Vijay Kumar is the Managing Director and CEO of NCDX. He has an extensive experience in the commodities markets, logistics and operations. As an agro-industry veteran, he has worked for leading companies like National Bulk Handling Corporation, Cargill, Reliance Industry, Arthur Anderson, ITC, Britannia, and Sharp Group. Vijay Kumar ji, we welcome you to enlighten the house with your views.
Yeah, thank you, Kamlesh, and thanks to ANMI for this invitation. It's really a pleasure to be here and to possibly introduce a segment that is relatively new, both in the SEBI sphere as well as in ANMI sphere in terms of the asset class itself. And I would like to start by saying that at least from an NCDEX perspective, which largely has instruments for agri-commodities, this has really been defined as the 1991 year for equities because of the string of liberalization that has been triggered by the government in this sector, mainly focusing on agricultural markets. So I'm sure a lot of you are familiar with those changes, but all of them point to a large opportunity and a significant growth ahead of us in this space. So while it's good to have this audience because I think we're all looking for newer venues to get investors into in terms of returns, and I'm confident that the commodities space and especially agricultural commodities offer those opportunities. So let me touch on a few of them for this audience. The first is that the commodity derivative markets are primarily from an economic perspective meant for hedging risks, and those risks are already being taken by entities in the commodity space. So every farmer has risk, every processor, every trader, every importer, and every exporter in agricultural commodities is already carrying risk. And I think one of the remarkable aspects about agricultural commodities, most agricultural commodities, is it is harvested once a year and consumed for the rest of the year. So someone needs to hold that commodity for the whole period. And this is typically what is one of the big opportunities of a cash and carry arbitrage sort of business. And this is being done historically. I mean, commodities was even ahead of equities in terms of these sort of opportunities, the markets, and the sophistication of the participants in India. And of course, there's been a period where all this had stopped. But I think now under SEBI, the value that commodity derivatives play for the economy is more clearly understood. And I think in the years ahead, the purpose is to get multiple participants into these markets for the purposes of risk management, as well as those seeking that risk or seeking that opportunity in terms of return by holding physical goods and hedging themselves on the platform as I described. So I think I certainly concur with Latika when she referred to the inclusion scheme. SEBI has been focused on ensuring that farmers and farmer producer organizations who constitute the producer of all the commodities that we grow in the country, that they come in and participate on the exchange. And I think with the use of options as an instrument, which was recently launched on exchanges after certain design changes with the help of SEBI and the Ministry of Finance, we believe this is a remarkable instrument for really a wide cross-section of farmers and farmer producer organizations using this instrument to protect themselves right at the time of planting. They can lock in their prices and giving them a guaranteed income on their crop and still benefiting from any upside in prices that may occur at the time of harvest. So this is, again, a significant opportunity to get sophisticated markets in India, thanks to from the progress that equity markets have made from 91 onwards, the robustness of these markets, and the degree of monitoring of these markets, and the discipline with which margining and the market behavior is managed. I think it really lends itself to now widening this participation. So we are at the exchange really pleased about this World Investor Week. It is certainly an opportunity for us to go across and spread the word both to participants and to intermediaries. I think one thing considering I'm having the audience members the ANMI members as among the audience, is to really get the size and scale of the opportunity in front of the members to say equities is not the only real opportunity. Just as an example, FCI today holds 300,000 crores worth of commodity, just one organization, right? And so the size of agri commodities, India is one of the largest producers and consumers of commodities. And at least on NCDEX, we are running futures markets on products like guar seed, guar gum, castor, which are globally, 80% of world demand is met from India. And India is the world benchmark for these commodities, and the same for spices as well. So the point I'm making is that money will flow in, investor money will flow in, mutual fund money will flow in, to hold these commodities and benefit from a cash and carry opportunity. And on the other side, there is a host of farmers and farmer producer organizations, as well as traders and processors who have exposures, and therefore they need to come in and manage their risks. So both RBI and banks individually have been pushing for hedging as almost a mandatory activity, as firms do with currency exposures, for instance. And I think the same thing SEBI has done for listed companies to begin to start disclosing their risks of commodity exposures and the extent of hedging of those exposures that they have done. So we assume that this will signal to rating agencies that if a company, large publicly listed company, is not hedging its exposures, then it will be rated negatively and face the consequences in terms of ability to raise debt at better rates and so on. So I would again urge ANMI members to take this opportunity. I think it will mean setting up a desk focused on commodities, but I can assure you that the space is so exciting. And I would just repeat, this is the 91 moment. So what has happened in equities from 91 to now will happen in commodities from 2020 onwards. So with that, thanks very much again for the opportunity. And I wish ANMI all the success. And I really appreciate this step and all other steps that ANMI is taking for these markets to be stronger. And we hope that sort of halo will rub off on the commodity segment as well. Thank you.
I'm sure we will be partners for that. And as you rightly said, if there are so many opportunities, probably awareness programs for even brokers level may be necessary, because as you mentioned, and as the members before said, that the rate of interest is low, and if there is an opportunity of cash and carry, which gives a better rate of return, plus holding physical and hedging the other thing, gives an opportunity to kind of work on, I'm sure we can take this thing forward. Surely we will do that, because it's, of course, again, it comes in the whole gamut of awareness and education, and we would love to take this forward. Thank you so much, Vijay Kumar. Our next speaker is Mr. P.S. Reddy ji, but I don't see Mr. Reddy ji. So from the Multi Commodities Exchange, could we, I think I can see Mr.
Hi, Kamlesh. Mr. Rishi is there.
Yeah, Mr. Rishi is there. Yes. So, regretfully, Mr. Reddy, because of his preoccupation, could not be part of this program. And of course, Mr. Reddy ji has a great experience in terms of being part of the BSE initially, and then he's the managing director and CEO of MCX. He has over 30 years of experience in diverse roles, with a host of senior level positions to his credit in clearing, financial and securities market, exchanges, and the ecosystem as a whole. We have Mr. Rishi Nathani, who is going to replace Mr. Reddy ji and speak on this topic. And we are ready to take your views on board, Mr. Rishi ji. If you can unmute here.
Thank you, Kamlesh ji, and thank you, ANMI, for having us here. It's indeed a pleasure, and this World Investor Week is a very important one, because the message of investor awareness and how important that is needs to be spread across. And regarding commodities market, I'd like to say that I'm especially thankful for SEBI, that ever since they have become the regulator of the commodities markets, they have done a lot for these markets, both in terms of new products and participants, in tightening and making the systems and processes, the risk management systems and everything more robust. In terms of new participants, we've had a slew of institutional participants allowed. We had category 3 AIFs, we had portfolio management services, we had mutual funds, bank broking subsidiaries, banks as clearing members. So a lot of new participants, EFEs. In terms of new products, apart from the futures we got options on futures, then recently options on goods, and we've got the index futures. And I'd like to dwell upon index futures for a bit, because we've seen them taking off and being a very successful product without any liquidity support. So index futures, they're very popular in the equity markets, and I believe in the commodity markets also. It's ideally suited for people who don't want to take or give delivery and want to have a hedge, whether it's a hedger or an investor or an institutional participant, and also a unique way to create a commodities portfolio through a basket of commodities in the index. So thanks to SEBI for this, and I heard people ruining the fact that less than 3% of investors in India access equity markets. Imagine what we feel in commodity markets, where even a fraction of that access the commodity markets. And I'd really like to encourage ANMI and all its members to look seriously at the commodity markets, as people before me said, that commodities are very important, both from the aspect of portfolio diversification. Also, when you have internationally referenced commodities in your portfolio, then you get a currency hedge as well, because if the price of gold doesn't move internationally, but the rupee depreciates against the dollar, then you gain from the domestic price of gold going up. So there are a lot of things, a lot of reasons why you can look at commodities. And I have seen that the growth of equity markets once actual financialization took place in terms of dematerialization towards the end of the last decade of the last century. And ever since that, you've seen a huge growth in equity markets. Similarly, I believe that with commodities, now you have the advantage of having physicality as well as financialization, because now you have commodities, you have the dematerialized commodities in terms of not the commodities being dematerialized, but the warehouse receipts or the ENWRs being dematerialized. So you can get finance against them, you can hold them in your repository account, and you have NERL, you have CCRL, so you can hold it either ways. And this can help grow commodities markets to a larger, in a very large manner because of this financialization. Another factor I would like to say is what Vijay was saying earlier about corporates doing hedging. A lot of corporates in India do not hedge their exposures, maybe because of that. Commodity dependent corporates, even banks lend to them, and they might have certain defaults. If they had hedged, maybe the defaults would have been avoided, or at least the business model is robust. The jeweler's job is not to gain or lose from the price of gold. His job is to just make the conversion charges, the making charges. So that is, if someone sticks to that, their business will be robust. So I believe that more and more corporates should come and hedge their exposure on commodity markets. Another thing which I feel will lead to the massive growth of commodity markets going forward is the permission of institutional participation, because every market normally starts with institutional investors and then retail and others add on. Because of historical reasons in India, you haven't had institutional participants earlier, but now since they are there, they will be very much able to make up for the latent supply that is there for hedgers who are not able to hedge because of lack of buy side depth. And when this long-term money comes on the buy side, I'm sure that liquidity, depth, and participation in the commodity markets will go up. Also, commodity markets are unique because you can, first of all, they're counter-cyclical to fixed income instruments and equities. Secondly, within commodities, you can play both sides of the economic cycle. So if you feel that there's global uncertainty, you can buy bullion. If you feel that the economy is doing well, you can buy base metals. So you can access commodities, and it's in a very nice manner. You can take part in every side of the economic cycle. And I'd like to congratulate ANMI for hosting this event and taking part in this World Investor Week. As MCX, we are also doing a lot. We are also doing quizzes, slogan writing competitions, investor camps, various awareness campaigns in print, digital media, and television. So I'd encourage all of your members to please take part wholeheartedly in all these initiatives that we are doing. And I wish ANMI all success in its efforts to ramp up investor education, because at the end of the day, it is only through proper investor education and awareness that we can get systematic and proper growth in these markets. Thank you so much.
Thanks, Rishi. That was really good. Again, couple of points that just came up was commodities is going to be part of the asset allocation for most investors, and gold is something that is loved by people back in India. So, of course, physical gold. And at the same time, you mentioned that rupee depreciating is a benefit for the gold to go up. And of course, to add two more points to it is that the institutional investors have now been allowed to participate in the commodities market. So that will give the necessary depth so that hedgers who want to hedge, or even the volumes, may be much better. I think options is one thing that we missed on, but yeah, options have also been part of the commodities market. So you have an option, you don't have to buy the contract straight off. So I think that was great. I did not introduce Rishi because I didn't have it at that time, but from my personal knowledge, I know Rishi heads business development and marketing at MCX, and prior to that, he was as a chief of financial segment with NCDX, and of course. So with that, thank you so much, Rishi, for sharing your views. With that, we go to Ashish Kumar Chauhanji. Mr. Chauhan is the MD and CEO of the Bombay Stock Exchange and a capital market industry veteran. He is one of the founders of India's National Stock Exchange, the NSE. He currently also serves on the board of directors of CDSL and is also on the board of governors of IIT Jabalpur. I welcome Ashish Bhai to enlighten the house and the investors in giving his view towards this week that we kick off starting today. Ashish ji.
Yeah, thank you, Kamlesh Bhai. Thank you, Anup ji. It's a pleasure and honor to be speaking here. I think all the speakers have done a wonderful job, and so we don't have much to speak about. But one thing I think I must tell you is that India is one of the largest markets in the world today in terms of the market capitalization. I think 145 years of official history and almost 200 years of what I call formal plus informal history of Indian stock market is largely due to the brokers. And I think it's a time to be justifiably proud of the trust broking fraternity has created in the minds of the investors. In last 1 year alone, almost 1 crore new investors have come into the BSE's fold. And that is one of the largest additions in any year. To some extent, it is due to the COVID period, but to some extent, it is also due to what I call the trust which we have been able to create as a market ecosystem. And so I think from here, the markets will grow. And each time when we have identified weakness in our systems and improved on them, markets have grown larger. Each time we have identified risk management practices where we are weaker and improved, markets have gone larger. Each time we have become faster, markets have grown larger. And each time there has been opposition to all these things. Even from floor to screen, there was opposition. From 15 days settlement to 7 days, and then T+3 and T+2 and all. Every time there has been opposition. And so opposition is justifiable. Nobody wants to change and so on and so forth. But what we have seen in recent years, especially after 1994, is that each time we have equipped ourselves better as a community. I think we have served our clientele better. We have given them more confidence. And I'm sure going forward also, ANMI will take leadership in ensuring that we remain the best regulated market in the world. See, today, with all your efforts, India is pretty much the most automated market in the world. It is better than US, it's better than Europe. And even in terms of the investor protection, it is 7th best in the world, even ahead of US, as per the World Bank standards. And so, in some ways, it is your efforts which have brought us here, and we should not try to remain behind. Sometimes, due to the short-term considerations, we want to stay behind and let the other people take charge, and then we can follow. But I think we have been thought leaders. All our members have been thought leaders, our regulators, our exchanges. And so we need to, basically, I think going forward also, we need to be thought leaders. The other part, which I have always worried, is that the business model is changing very rapidly in stockbroking. Many people are aware, many people are also finding it difficult to survive in this cutthroat zero cost or very low cost kind of brokerage houses coming in. And so the business models are changing, and the brokers also have to understand that this is part of the life, part of the progress that is happening. And how do we expand into other areas? See, we are in a way, we are the most compliant community in the country today. In every aspect of life, we are the most compliant community. Can we go into other areas? Already we have gone from equity into equity derivative, then in interest rate futures, then in currency futures. We have then gone into mutual funds, then IPOs, distribution, which we were not doing earlier. None of this were, only we were in stock market equity trading only. Then slowly we have gone into all this. And these were not businesses which we were aware of. Now we have gone into commodities also. Even BSE is into commodities. And so we have already gone into other areas without our knowledge. Once it happens, we are not worried. But till the time we do newer things, we start worrying. So my request is to also worry about going into which are the businesses you want us to go into as exchanges. We have already gone into insurance distribution, as you know, with a EBIX partnership. We also have India International Exchange, which allows you to trade in literally a offshore market, which with no taxes. As you know, GIFT City doesn't have taxes, and we are doing close to $10 billion a day transactions volume also there. And many times the India International Exchange index futures, index options do more volume, index derivatives do more volume than the SGX. And similarly, on many days, the Indian excess gold volumes are more than the DGCX. It is just that we still think that those guys are better because we want to keep it in our mind that we are inferior. So my request is to also think that we are superior, go out and win the world. The government of India has given us this opportunity, and we should take it with both our hands, and also inform the exchanges which are the other areas which you want us to go to, and we can take SEBI's approval, of course, to get into newer areas. But you have a distribution across the country in 3 cities plus, and I think being so compliant, we must try to take advantage as a community and earn more money, and of course provide more services to the investors. Today BSE is 6.5 crore investors registered with the UCC, and if you do still more than 3 crore PAN numbers, it is more than the entire mutual fund industry put together. It is more than any other exchange in the country. Why? Because we are an investment exchange. We can continue to trade, but it actually serves very little purpose after some point in time. But investment is what the exchanges should continue to focus on. Raising funds in this financial year, last 7 months, BSE alone has raised 10.42 lakh crore by way of commercial paper, by way of fixed deposits, by way of bonds, by way of rights, equities. 10.42 lakh crore in approximately 120 days, working days. Literally, we are doing 8 to 9,000 crore of raising every day, including for municipalities, for companies, for everyone, right? And so you are doing a government job in the country. And my request is to also focus, because that is more remunerative, more safer for you, and also it helps your customers and companies. And my request is, let's basically try to use our expertise, our understanding of people's psychology, our hugely compliant staff across the country, and ensure that the India grows, and with that we grow. So somewhere on the line, it is up to us that our growth from 6.5 crore or 3 crore investors on PAN number basis, we need to go to 120 crore investors. It is 40 times more that we need to do. $2.3 trillion of wealth you have helped India create in last 145 years. But in next 50 years, can you make that 2.3 trillion into $23 trillion? Then you would have done a great service to the nation. And of course, in the process, you would have also benefited a lot. So my request is, let's have our vision larger, our sort of aims higher. And even if we don't do $23 trillion of market cap, if you do $15 trillion, it is still better than $2.3 trillion, right? Today we have already reached there. We need to keep on aiming higher, and I'm sure ANMI with Anup and Kamlesh Bhai and all will take this forward and ensure that India in next 30-40 years is ranked amongst the top 3 nations in the world in terms of market capitalization. Because trading, we can be number 1. It's like trading running on the treadmill. You reach nowhere, you stay there. If you have to do the journey and go to Mount Everest, you can't run on treadmill alone, right? And that is where, for me, the aim has to be higher, aim has to be correct. And that is where I think the enlightened leadership of NB will certainly take us there. So my best wishes to NB, and of course, I'm delighted to be a participant in the World Investors Week, which SEBI has taken up. Today morning, we did the start of that week by ringing the bell, where Shri GP Garg from SEBI came to BSE and rang the bell. And I'm sure this week, BSE has got almost 239 such events lined up, including this event. So we would be pretty much busy every hour last year alone, BSE did 6,200 events. And any working day, we have 25 events of this type going on. And that is why I'm telling you the scale required is probably 20 times more. What we are doing is very small compared to size of the country. We may get impressed by our own achievements, but I think we have much more work to do. And I'm sure NME will work with BSE going forward in achieving that objective. So thank you very much for calling me. All the best.
Thank you, Ashish ji. I am sure we're going to work together in terms of achieving the larger vision that you have mentioned rightly. So, and thanks for broad basing our vision. At the same time, also, you made a point that we are the best regulated market, which kind of makes us feel nice about the whole thing. Also, something that you brought out is that there is no point running on the treadmill. And for investors, because this is an investor forum, investment and long-term investment is something that is more close for people who are investors, and that's the best way to grow your wealth. Of course, investment focus of almost, you've mobilized 10.4 lakh crore on the platform of the CP. And of course, the Gift City, which is a tax-free spot, where also large volumes, even more than SGX, happen. Thank you so much, Ashish ji, for sharing your vision and being part of this event in your such a heavy schedule, and as you are there. So with that, we would want to now go to Mr. Vikram Limayaji. Mr. Limayaji is the Managing Director and CEO of the National Stock Exchange. He is finance industry veteran and over 3 decades of experience in working with leading global investment banks, international commercial banks, and global accounting firms. I think Vikram Bhai is not to be seen on the screen, but I think
He's there. He's there.
He's there. Vikram ji is there. Okay.
He's there.
So Vikram ji, can I ask you to say some few words and highlight us?
Respected Shri Anand Mohan Bajaj, Additional Secretary DEA, Ministry of Finance, Shri Barua, full-time member SEBI, Shri Sunderesan, Executive Director SEBI, dignitaries on the dais, Shri Khandelwal, President ANMI, ladies and gentlemen. World Investor Week is a week-long global campaign promoted by IOSCO and in India coordinated by SEBI to raise awareness about the importance of investor education and protection and highlight the various initiatives of securities regulators in these two critical areas. From the past few years, NSE has been actively participating in the World Investor Week, and this year too, NSE will actively participate in World Investor Week 2020 from 23rd to 29th November 2020. To mark this occasion of World Investor Week, NSE has organized Ring the Closing Bell ceremony on November 23rd, along with various investor awareness programs that are scheduled throughout the Investor Week. One such initiative is Be Your Own Lakshmi, focused towards young women earners and women entrepreneurs, where more than 2,500 women would be participating. A national level investor knowledge quest is also being organized jointly with NSDL. We believe that an educated investor is a protected investor, and we have always been encouraging investor education through our motto, Sochkar, Samajkar, Investor. We have been actively conducting various investor awareness programs through on-ground IAPs and now through webinars to educate young investors as well as working professionals by creating awareness on the dynamics of the securities market. The launch of Platform for Investor Education by Bangalore is another milestone in our continuous efforts towards investor education. The Platform for Investor Education is a unique platform that imparts investor education in simple, easy to understand video, audio, and other digital media formats in different regional languages. NSE has an elaborate investor education and awareness program across 600 plus districts that includes over 4,000 programs conducted throughout the year and partnerships that deliver digital programs to achieve scale. Such initiatives have contributed significantly to improving retail participation in India over the years. NSE witnessed more than 1.5 crore new investor registrations in the last 5 years, of which more than 36 lakh investors were onboarded in this fiscal year. Traditionally, metropolitan cities have been the major contributors to the capital market. However, an increasing number of investors, particularly from Tier 2, Tier 3 cities and beyond, have been actively contributing to India's growth story, as reflected in the shifts in investment choices towards mutual funds and capital market instruments. One of the major reasons behind this change can be attributed to improving investor awareness via enhanced availability of information through digital media and growing awareness amongst general public about newer financial asset classes, apart from the conventional fixed deposits and other such avenues. The wave of change in today's Indian capital markets can mainly be attributed to the higher education levels, availability of information and investment tools at everyone's fingertips, and investable surplus. The trend of more and more investors coming into the capital markets, either directly or indirectly through mutual funds, augurs well for efficient capital allocation, supporting strong economic growth of the country. NSE plays a critical role in working with the regulators, government, and market participants in the development of India's capital markets. NSE is always focused on what is in the best interests of investors, the Indian economy, and markets, and in improving the financial well-being of people. We recognize our responsibility to help India achieve its aspirations and take its rightful place amongst the world's leading economies. Thank you very much.
Thank you, Vikramji, for highlighting points that have been taken up by NSE, right from a separate platform for learning on a regular basis, which on a weekend, you have these educational seminars which are there. Even it was nice to know that almost in the last 5 years, 1.5 crore investors have been onboarded, of which 36 lakhs have been onboarded in the last year itself. Even though I think it's one of our business that has actually not been disturbed much in this pandemic times. Though, of course, people have been doing business, staying safe at home. At the same time, have been able to do at least the business versus a lot of other industries, and businesses have been affected quite a bit. So I'm sure it's because of all these efforts by the MIIs, SEBI, and the DPs, and everyone. The whole ecosystem is working towards ensuring that the 5 trillion goal that the government of India has put on us. So I'm sure with this great words, I would like to hand over this to our alternate president, Mr. KK Maheshwari ji. Mr. KK Maheshwari ji is the alternate president for ANMI. He is the chairman and managing director of CIL Securities, which is a diversified financial services company and a member of the NSE and BSE, a SEBI registered merchant banker, registrar and share transfer agent, as well as a depository participant. But before I hand it over to Maheshwari ji, I just wanted to thank Mr. GP Garg, ED SEBI, and Mr. Hariharan, CGM SEBI, for their wholehearted support for the success of this event, apart from the dignitaries' presence here, because they have also been very helpful in coordinating most of the efforts with our CEO. Our CEO also has been all the time, because we put this event in the last 3 or 4 days. But for a formal vote of thanks, hand it over to you, Mr. KK Maheshwari.
Thank you very much, Kamlesh Bhai. Our guest of honor, Shri Anand Mohan Bajaj, Additional Secretary, Department of Company Economic Affairs, Ministry of Finance. Chief guest of the day, Anand Barua, full-time member. Shri V. Sunderesan, Executive Secretary. Shri Sunil Kadam, Registrar, NISM. Our international speaker, Mr. Lyndon Cho, Managing Director, Head of Equities and Post-Trade, Asian Securities Industry and Financial Market Association. Shri Nehal Vora, Managing Director, CDSL. Shri G.V. Nageshwar Rao, Managing Director and CEO, Metropolitan Stock India Limited. I'm sorry, Shri G.V. Nageshwar Rao, MD and CEO, NSDL. Ms. Latika Kundu, Metropolitan Exchange of India Limited, Managing Director. Shri Vijay Kumar, Managing Director and CEO, NSEIL. Shri Ashish Kumar Chauhan, Managing Director and CEO, Bombay Stock Exchange. Shri Vikram Limaya, Managing Director and CEO, NSE. Mr. Rishi Hani, representing MCX as the Business Development and Marketing. It's my proud privilege to propose the vote of thanks to our distinguished speakers and to all the investors who are this today in the inaugural ceremony of the Investors Awareness Week. And the ANMI acknowledges the contribution of SEBI, stock exchanges, depository participants, stockbrokers, other industry stakeholders for the continuous efforts in promoting investor education. Investors Education Program is a continuous process for updating the investors, and it is necessary that in this dynamic and ever-changing capital market, where there are new products which are being introduced from time to time, there is a need to constantly update with the latest information. It is the duty of we, the intermediaries, to keep educating the investors with do's and don'ts to ensure that the investors take right investment decision so that they can meet the desired investment objective and to ensure that their investment is safe. During this week, ANMI will be conducting Investors Awareness Program for all the 7 days during this week for the benefit of the investors. We will be having the best speakers, both from the exchanges, from the regulator side, and the stockbroking side, who would be addressing our investors on a daily basis. I would like to thank ANMI team for their efforts put in by each one of them to make this program a successful one. I once again take this opportunity and thank esteemed guests and the investors for their valued participation. Thank you, one and all.
Thank you, everyone.
Thanks, everyone.
With this, we close for this, and we look forward for going forward for tomorrow onwards the independent sessions from the eminent speakers.
Yes.
And we thank all participants over here and dignitaries. I look forward for the same support from ANMI and also the Ministry and SEBI and other dignitaries, the exchanges. Thanks a lot. Thank you, Kamlesh Bhai. We will remain here.
Thank you. Thanks everyone for joining in.
So we end the session over here. Thank you.